Hello, everyone. Welcome to this session on how we provide our short-term rental investors ROI. We're pretty much going to do a quick overview on ROI. It's a very common term, and then we're going to step you through how we create this example for our investor clients. It's a good narrative. It's a good because everything in one place. It might look a little complicated, but it's actually a pretty quick process. We're going to provide you with a copy of the spreadsheet that we're creating in this RI example. So from there, you can plug in your own numbers. Am I too powerful? So shortly. Sideways? Okay. Oh, wow. I can even hear myself better.
Yeah, that's better. Much better.
All right, so let's just dive right in here. So, ROI is a buzzword. It just means return on investment, return on investment. It's a simple calculation that people use to tell you if you've made or lost money on an investment or a project after accounting for its costs. So ROI is calculated by dividing the profit earned on an investment by the cost of that investment. And we use this calculation to provide a simple rate of return ownership synopsis schedule. So we'll step you through that, but just as a disclaimer, it's impossible to guarantee that investment will have set returns. However, the method that we use, we actually report on the actual booking performance of a real Airbnb or Vrbo. So we're able to really show our clients, like, look, like these units are doing really well, and you can do well too if you invest.
Yeah, and it's good that you say that, because each property will perform depending on how well you manage it, right?
Yeah, it's a small business.
So doing the right things to it, or marketing it properly, or having the right things in the property will determine what return you get at the end of the day.
Yeah. Yep. So you'll see as we step through this, we really let our clients know every unit's going to perform different, but it's how it's run that really can increase your positive returns. So for our example, just going to start with the math first. Remember that this the ROI calculation is very simple. You just divide the profit earned on an investment by the cost of that investment. And so with the vacation rental, we're really talking about the real money, not the $300, $400, or $1 million for the house, just the money that the client needs to come up front with for the down payment, closing costs, and any renovations or changes that they want to make to the short-term rental. These typically come furnished. So in this scenario, and there's going to be some snippets of this rate of return ROI schedule that we provide to the client as we step through this. But in this scenario, let's say the client is going to invest $45,000. And when we talk about how quickly they're going to get their returns, there are really two ways to consider. There's a property managed by a property management company. And the fees for that range from 10% to 30% of the cost of the bookings. So really simple, if they get $10,000 in bookings a month, some property management companies will charge 10%, $1,000. Some will charge 3,000, 10 to 30%. Our example is very conservative. It's just 10%. Don't want to scare the potential customer away because it's really their option. They may choose a management company that is more, or they'll choose to self-manage. Self-manage um, sees more money in your pocket a year, in the investor's pocket a year, because they're not paying a management company. It's not for everyone. Um, some people may be very interested in managing the short-term rental. Some just like, okay, I want someone to deal with everything. But it does affect the returns that they'll see.
Yeah, and if we go back to that, if you guys are working with an investor, right? You should, I think you should encourage them to manage it themselves. That way, the bottom line will look more attractive, and they might say, all right, let's go ahead and move forward with this, because that, we've sold our fair share of short-term rentals last year, 15 plus, and that's what we have told our clients, and the numbers don't lie. They see the potential for profit, and for that reason, they tell us to go ahead and move forward with whatever purchase they're considering.
Yep, and some have chosen to self-manage, and some have signed up with the management company to take care of most of us.
Right.
So it's good to show the client they have options on how to move forward. Dive into the next one. So we know what ROI is, right? We know someone wants to invest in real estate. So what we found is a lot of times these short-term rental units are for sale because they're underperforming. So what we do is we find, we go to all the rooms. You can use a different reporting site, but we found that all the rooms has been really easy to use. You'll need the Airbnb or Verbo property ID, and you'll need to find an exact match. So if you're showing a townhouse in Paradise Palms, that's 4-bedroom, 3-bathroom, you have to go on Airbnb, zoom in on the map, find the exact same type of property. And that way you can show your client, look, so they'll want to request the financial data from the listing agent, right? So this place looks drab. They're going to need to paint it. They're going to need to swap out the sofa, and the numbers are going to look bad. So this schedule was really encourages a lot more sales than the historic data of a poorly performing unit would. So that's why we use this method. You find the exact same type of Airbnb that's performing well, because your client's they're gonna run this business well. It's not gonna be this neglected one that we're buying now that they're gonna buy it because the price is great.
Correct. And based on our experience, because we've been to all of these communities, these units are 15, 20, 25 years old, owned by overseas investors, where they bought it whenever they did in the early 2000s, and nothing has been done to the unit other than just touch up paint, but really old furnishing. So that would not be the ideal listing to compare or pull data on, because it's clearly not going to perform. Find a listing that's been renovated or has been refreshed. Clearly those will have a better story
Yeah.
to tell.
So the reason we do this, sometimes the deal stops at, they get the historic numbers and it's like, oh my goodness, all hope is lost. This is never going to pay for itself. So what we're doing here is we're not making things up. It's like, look, a 4-bedroom, 3-bathroom can actually perform like this. So you find the example. It's got to be a good one. We actually put our Airbnb here. So you have to find one like ours that's doing really well, a really high score. And then, so this is all the rooms, if you use, I think there's Air DNA, it's going to be slightly different, but you're going to get very similar details. You're going to go to more details, and what you want to do is export this is a paid service. You want to export a year of data. And this is what you'll use to show your potential STR investor that, look, this could really work out for you financially. So I just mentioned Air DNA, all the rooms, they're not free. All this data is collected up because they want investors to explore and see if they want to get in this business model. And a lot of people will dive in, use this service for a month and explore. And we typically will subscribe for a month. Then we have some regular sales, and then when we need it again, we'll subscribe again. So don't be scared of like you're going to spend $600 a year. You use this once or twice a year. It pays for itself. So you need the pro plan. So it's not 600 a year. You just cancel it when you're done, right? So you get the pro plan. You can actually look at this stuff, but you can't get the real occupancy percentages. And to give a real truthful example to the client, you really got to get the pro plan. You got to get the average daily rate, and you got to get that occupancy percentage. That's super important.
Yeah, and you have a point. I mean, these investors, obviously they're buying these properties because they want to make money, right? So they're going to want to see some schedule, something that shows the potential profit. So, I think this is the most accurate way, to pull that data so you can, build your schedule, which we'll discuss in the next slide.
Yeah. And so this is, again, I just want to reiterate the ROI example. Like we want to show them like that they're going to get the previous numbers from the listing agent, right? We're going to say, all right, how did this unit perform? But we're also going to provide them with this that shows, hey, well, this unit is exactly the same and it's performing really well. So you can run your business that way and not how the previous owner has run it. So you get that occupancy rate, you get the average daily rate, and export it for 12 months and calculate it monthly, because it's just very easy to have 12 months on this ROI example schedule. So you do daily, it's really hard to represent that.
Right. And also, the reason why we do the data for a period of 12 months is because, when you read financials, you read that on like a yearly basis, like on a yearly, right? You look at a 12-month data, right? Also, some banks, depending on, if the customer is paying cash, it doesn't matter. But if they're doing an investor loan, the bank is going to want to see some sort of performance and the potential for profit. So then they could, approach the loan.
Yeah. And your clients will actually provide this ROI example to the bank, and that will help them. That's helped some of our clients actually get their loans. And so here we have, this is our raw data. This is how a Airbnb actually performed in the past 12 months. So this isn't, misguiding them. This is really putting the whole deal together, saying like, you can run your business this way. These are the returns that you can see. Real data. We're not making this up. It's actually performance that we're pulling. So we take all this data. So we talked about ROI, why we find this like for like match. And we export this data because we create this schedule that we just mentioned. And it gives you all the details in one place. So the next few slides, we're going to show you the top part. This breaks down the monthly performance. It includes the daily rate. And every day of the month is filled out, but the total is calculated against the occupancy rate. And that's what gives you the real month's gross income that this unit actually got. So in Gil and I experience, the bank wants to see it performing at least 70% occupancy. In this example, the average is 74%. And the bottom part, this is really a value add that Gil and I add. We break down the ownership costs. And there's ways that you can calculate that. The MLS listings are already going to have the HOA fees. It's going to have the taxes. You can kind of guesstimate at the insurance and the utilities. And then in our example, we have just 10% for the management fee. But let's dive right into that. So I'm so sorry. I thought this was going to show up a little larger. But this is the top section of the schedule. This RI example that we give to our investor clients. And it has all of, compares the data that we exported from all the rooms of the actual performance of the exact type of listing that the client is considering. So kind of give them an idea of the gross monthly that they could yields if they run their business well, and we'll help them do that. And then that total, that even though again every uh, day is filled out, the total is calculated against the actual occupancy percentage. So it's important to point that out, because you give them this like, wait, every day is booked. That's not possible. And even the bank's going to say that, but you point out that it is actually weighted by the occupancy percentages.
Correct. Yep.
So now the bottom part is really what pulls this ROI example together. And again, we're going to give everyone a copy of this. All the calculations are there. You just have to kind of put your reporting into here. But this bottom part is, it details the ownership costs. So here we've got HOA fees, utilities estimate, other maintenance that you might anticipate, your insurance. And if they choose to have a management company, we have this line just kind of highlighted to say, you could choose a management company, or if you self-manage, you keep this money in your pocket. Now, what we also have is, this is actually pretty accurate, because Gil just sold this house here, and it's in the same community as our Airbnb. So these numbers are actually, like, everything about this is just accurate. And that's really, really motivating for your investor clients. And even if they use this for the bank, that's very reassuring for the bank that this is real data. These numbers are very, very close to actuals. And sometimes the bank doesn't want to see this. They just want to see the gross income. And this is where we turn this into like that rate of return ownership scenario example. Someone putting 45,000 down and they self-manage. Won't even be 2 years, they'll earn all of their initial investment back, and everything else is just pure income. And their guests are paying into their equity. And when they sell, they get, it's just a tax shelter. It's just, it's a great investment. It's not easy. You're running a business, but we're able to show a client. We also have the offer here, the exact listing that this data came from. So we're able to really kind of seal the deal with this spreadsheet. See how much you're going to make every month, how much it's going to cost you every month, your options on managing it yourself, or if you want to, 20,000 might be great return for a year for some people if they don't want to be bothered. All those options are just in one place for the client to see on this example. Now, that's, we're going to give you this spreadsheet because you can just you can use this as a sales, a marketing instrument. It's like, hey, anyone who wants to look at the short-term rental market here, contact me, and I can show you how some of these are performing. And that could be a way to get some business. But investment comes with risk, so showing the ROI potential can really motivate people who are interested in investing. So most people, they're not just going to look at one house and buy it right away. They're going to look at 4 or 5. We prepare. This is just one workbook on a sheet, but typically we'll have 3, 4, or 5 tabs on that workbook showing different properties, and that helps an investor client to kind of narrow down which one they're going to pick. And we're our Airbnb host, so finally we advise our clients that running a vacation rental in an STR, it's a small business, and how well you run it could increase returns. In this example, we had 74% occupancy. And still, with all the bills paid at the end of the year, you walk away with $20,000 or 25 if you self-manage. But if you get 85 or 90% occupancy, just by giving great customer service or choosing a great management company, then you see even more. There's even more potential, and you can go ahead and take that workbook and say, okay, let's say if you get 90%, so the bank only wants you to see come in at 70%. This example works out really well at 75%. Let's say at 90%, and then that could be really motivating because now it's not 20 or 25. Now you're looking at 30 to 35 in returns. And I did want to mention that clients we worked with one time, after we went through this process, providing the ROI example, their budget went up by 50%. So instead of buying a $300,000 unit, they ended up buying a $450,000 unit just by seeing the real performance numbers of a similar unit.
So obviously, it's very important that you present these schedules to your investors because it tells the story. And clearly, these investors are in the business to make money, right? So they'll do what makes makes most sense.
What appears to make the best financial sense, yeah,
Correct.
based on this real data.
Mhm.
And that's it. And we are open for questions. I know this was a lot of info, but we presented on one page. You'll get this page so that it's easy to just kind of sit on that one page and talk about everything regarding that particular listing. So we stop presenting and we can all look at each other. Hello, everyone. Oh, so we have any questions, or you guys just want your spreadsheet and get to marketing to potential STR investors? Yes. Okay. Let me see. Wait, there's something in the chat.
Oh, okay.
Oh, yes.
Judy, ¿qué pregunta en específico tú tenías? Oh, you have to unmute.
How do I do that? Oh, they can unmute. We're not, it's
Okay.
not locked. So if you guys want to chat, you can unmute yourselves. We can answer any questions. You can also just shoot an email. There's the WhatsApp chat. We're always here. So when you guys get an STR client that might invest, we can help you with that.
All right.
All right. Short and sweet.